You think you're the only one who's trading Forex. Wrong. The Forex market is a 7.5 trillion battlefield controlled by 6 major players, and you are the last one on the food chain. Let's break down who runs this game and how you can trade smarter. What is Forex market really? Forex market is the largest financial market that is open 24 hours a day, 5 days a week. But the price, the chart that you look here, that you are watching on the screen, doesn't move random. It's controlled by power. It's moved by power, big capital. Now, these 6 major players, they play a big role, and I want us to understand how they influence the market so that you can be able to trade smarter, and how you can actually align yourself to flow with them and not go against them. Now, we have the first one here on the list, central banks. These are the major players. They are the gods, right? They are mostly focused on controlling the economy. They are controlling what? The economy. They are controlling the economy, these ones. And we can actually give them the statue of a god, because they are controlling what? The economy, where a currency has to go, and they have so many reasons for actually controlling the economy. So we're not going to go through that. Now, they are focusing on a long-term gain. Now, the long-term gain, they are focusing on trends. Like, they want to understand in a 10 years time where the money, or where the value of the currency will actually be. Now, we have the government, institutional investors. These ones, they are more focused on international trades or investments reasons. These ones, they are just focusing on that, right? Like when we want to buy a product, they are mostly focusing on international trades from one country to another country. Now, these institutional investors, we also have these ones. We can put them, let's say for the gods here, we can put them in scale 1 to 10. They are 10 out of 10, because these ones, they influence the market. They are here for the long term. Now, institutional, we're talking about the government. This one, we can put them in a scale of 1 to 10. We can put them at 8, right? They are mostly focused on that. Now, we have commercial banks. Commercial banks, there are so many banks that actually trade the market, and these ones, they provide the money. They provide the money. These ones, they provide money. These are the ones that they pump the money in the system, right? So they are focused on making profit. They are focusing on making what? Profit. And these ones, it's much easier, because they are making things easier for us when we want to trade. Now, they are mostly focusing on making profit, and they have many ways to make profit. And they make profit from who? They make profit from the brokers, individuals. They make profit from these ones, right? When they make profit from these ones, we pay what? We pay spread. So they have so many ways of making money. Stop hands, and they are trading on a day-to-day basis. I want you to understand that they're trading on a day-to-day basis, right? They are more like of a short-term, medium-term, and long-term investors here. So now we have brokers. Brokers, we have another player here, brokers. So brokers, they are not influencing the market, but they offer the service, right? They offer the service to us, and they make money through what? Because we don't have access to the commercial banks, we don't have access to the government, we don't have access to the central banks to trade the financial market. So our best shot is to actually trade. We're using brokers, and the brokers will be charging the spread. So if right now we look at the brokers, they are mostly focusing on giving us what? The service that we can actually now speculate on the currencies under CFDs, and they borrow us what? Leverage. So it's important for us to actually learn more about this business model, and this is what we are really into trading, right? Now, we have another player here. This player, these are big players, companies, right? The companies, they need to exchange currencies for businesses across borders. So these companies, right now, they want to buy, example, an Apple or Samsung company, they want to convert the US dollar to maybe let's say a euro, to pay for maybe let's say a European or operations, they will need to actually what? They will need to actually convert that money through what? Through the financial market, which is Forex. They are not speculating, but they are trading, giving what? A higher volume. But these ones are short terms because these transactions, they just happen in just few minutes, right? Now, or few minutes or few days, depending on how they actually sign up to those contracts and how they want to pay up or want to convert that money. So, us on the food chain, the last man standing here, us retail traders, you and me, we are here. We only make up 5%, 5 to 10% of the daily volume, the total daily volume. We are only making this 5 to 10% daily volume. Now, often, if you understand a strategy, like the strategy that we use in Forex, like how we manage to trade the support and resistance, supply and demand, because in reality, whatever that we're doing in market, we want to be able to understand these two things: market structure, where price is going, when to buy and when to sell. This is what we want to understand. So now, these individuals, if right now you get the right information, trade with the right Forex strategy, like the deposit strategy, you trade with the deposit strategy, you'll be able to understand that we're trading on what? On supply and demand. Now, we can actually ride behind these big players, right? Once they create these movements, we can actually what? Ride with them, right? We can plan with them. So why you keep losing to big players? You are trading breakouts. These are the strategies that you've got. You are trading patterns, right? This is why we keep losing. We keep losing because we don't understand the sequence around these patterns, how this pattern forms, why they form, and we don't really pay much attention to the price action, the key four things. When we look at candlestick: open price, close price, high price, and lower price. So we are trading just to trade because we want to buy high, we want to buy low. That's it. So if you don't understand who is behind the big moves, you will enter at the wrong time and lose money. So it is important to understand that we have to trade using what? Using the supply, the demand, support, and resistance. These are the two things that you can actually apply. So how I trade as a retail traders, I use supply and demand. And if you do not understand how I use the supply and demand, this is what forms the key deposit strategy, that we have to look at the supply and demand. The supply, we're looking at the movement of a candlestick that is actually in this way, engulfing candlesticks. This is our candlestick that shows supply, and the resistance is we're looking at the zones. So we're looking at the highest price possible where we actually can enter the market, like in this case. This forms this candlestick forms our demand zone. This candlestick above here forms our supply zone, which is where the supply is, where the demand is, and our resistance is above here. Our support is below here. So we have a combination how to actually apply this precise strategy to buy or to sell. So we apply context to understand the higher time frame, because these players, even though they have a control, they can't control the higher time frame fast. So they take time to actually accumulate orders and manipulate, then distribute. Retail traders, they lose because they don't understand why they are trading, what they are trading against you, who they are trading against. You do not understand. This game isn't about indicators, it's about positioning with power. So next time you enter a trade, ask yourself, what will be the banks do here? But if you don't have some clarity, you like to advance your skill, you can join our mentorship program. I'll be much happier to assist you to understand what you need to do when it comes to doing analysis. and risk management, because there are many things that you need to know. So if you like this video, you've learned something new, comment, I've learned something, Boza. Thank you so much. If you are ready to level up, you can actually connect with me, right? Subscribe for more content powered by Boza Trader Strategy. I love you all. Stay blessed. I will see you on another tutorial where we learn more about how to actually risk in this way. So these are the players that are there in the foreign exchange market, and they are important to understand that they influence the market. So once they influence the market, our best entry, our best where we have advantage, it's using the higher time frame. The higher time frame, we can use the 4-hour, we can use the daily, we can use the weekly to be in a better position, so that we can be able to confirm in entries using smaller time frame. And these high time frames, when we see direction, we must understand the market structure. Under market structure, we have the supply and demand, we have the support and resistance, and these ones, or when we look at the supply and demand, or support and resistance, we have price action. Price action, it's for us to actually understand the supply and demand between the or support and resistance. So I trust you understand. Stay blessed. I love you all, and please stay tuned to this channel. Love you all.